It's just off the charts what is happening. Greeks are trading in their euros. They're buying precious metals. And now the sales ratio has reached 5-to-1. And to give you an example, they talked to a person by the name of Tomas, a Greek computer technician, and he's exchanged his euro savings for gold coins. I keep them at home, just like my grandmother did in the Second World War. And Harold, that's the world that we live in today. Central banks, governments around the world have made money, obviously a very scary thing to be having in a bank account or in your pocket. That's why people are moving into hard assets. And I think we're starting to see that not just in the Far East, where that's been going on for a long time, where in India and China, they covet gold and silver and diamonds. But now we're starting to see it in other places like Greece, because they're waking up to the fact that governments, when it comes to the finances, they always seem to do the wrong thing. So you need to take care of yourself and have some precious metals on hand if everything goes sideways. And it's amazing, in our newsletter this week, Harold, we do have a section on Greece. And most people do believe that it's just a matter of the timing, but Greece eventually will go in default. And it's interesting that the UK is preparing for a default, and actually even preparing for the euro to crack. So, when you have big governments preparing and getting ready, and everyone basically saying it's just a matter of time before Greece defaults, it only makes sense that people would have an allocation of precious metals during these very chaotic times financially.
Oh, you're 100% right, Randy. The thing is that you really need to diversify yourself, because there are so many issues out there that are problematic that if you don't pay attention, one wrong move could put you into a bad financial situation. So again, my strongest recommendations right now are just to be extremely conservative. There's so many confusing and dangerous things in the markets right now that any type of speculation could hurt you substantially. What you really want to do at this point is just to be very, very cautious. We work so hard for our money, and we put our money away, and there's so few investments right now that you can see any return. You can't put your money in the bank and get any return, and you can't put your money in real estate and make any return. And again, it's not like the old days when, you could make money in the stock market. So those three areas are really closed at this particular point, and that's why this show is so important, because we're bringing you alternatives, other investments that make much more sense, that are much safer, and perform well during those extremely difficult times. Again, how many people know how to react to a country going bankrupt and a currency going bankrupt? In most cases, people just can't understand what to do, so they don't do anything. But again, it's extremely important. We work so hard for our money, and again, the last thing in the world we want to see is our listeners to our radio show do the wrong thing and not make the returns and protect what they have. You want to have part of your money, maybe 20-25%, in physical precious metals, gold and silver, with a major emphasis on silver. I believe silver at $35 is a tremendous buy, and I believe we'll see silver over $200 before this whole thing is over. So again, we have a chance of another, 500-600% return on silver over the next 5 years. I think that's a great buy. We're going to talk about diamonds in the second half. It's never been more important to be in that market also, because of all the things that we're talking about. But again, be very conservative. Keep most of your money in hard assets and cash, and I would definitely 100% be out of the stock markets and the paper asset market. Again, the stock market right now is down almost 200 points today, and again, we've seen that market drop in half when certain situations happen. The thing that scares me most about Greece, Randy, is they're comparing it to the Lehman situation in 2008 that almost destroyed the financial markets as we know it.
Well, now is a time to obviously start thinking like those in Greece, and that is have an allocation of precious metals as a safety, as an insurance policy, and it's going to profit and protect your wealth. We talked about it on the last show. Inflation ate away last year, for those living in the UK, roughly $50 billion. That's the silent killer. Inflation is the silent killer we don't think is going after us, but it is. And you need to protect yourself against inflation. The telephone number to invest in precious metals, 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com. You can sign up for our free weekly newsletter on the website. Even better, speak to them. The sovereign debt crisis, it's sort of interesting because everyone is saying that Greece is essentially bankrupt even with aid. Greece is bankrupt, and any attempts to solve the sovereign debt problem with a new bailout will be kicking the can down the road, according to Andrew Bowles. He's with PIMCO as well. He's head of the European portfolio management of bonds. Even if the nation is granted fresh aid, these issues are going to come up again in the next months. And he was interviewed on Bloomberg. If we would be, he basically said it would be complacent if investors think this can be kicked down the road until 2013. In fact, the head of PIMCO, Mohamed El Aaron, and he went on to predict that Greece and other European economies would default on their debts to resolve their problems as the euro area faces a debt crisis. As I mentioned earlier, the British are preparing for Greece to go bust and the end of the euro. When you hear these things, it's got to wake you up. In fact, Fitch is warning on the United States now. They're warning that the United States must raise the debt ceiling by August the 2nd or lose their AAA rating. And the debt ceiling as well, another warning from Moody's of a downgrade. UBS is a warning of Armageddon, and there's no sign of a deal on raising the debt ceiling in the United States. In fact, the Congressional Budget Office, the CBO, sees government benefits swamping the economy in the United States with little relief over the long term. They think that Social Security, Medicare, and Medicaid in the United States are going to swamp the system. And we talked about those numbers over the past two shows. Bill Gross saying that it's around $100 trillion. That's why we're saying get into precious metals. And Peter Schiff believes the U.S. is set to default. And he thinks silver, as Harold mentioned, is heading to $200. When asked about gold and silver in the environment that we're in, he says it will go straight up. That's why you want to buy your gold and silver before that atmosphere. Regarding silver specifically, Schiff had this to say: I think that in the low 30s represents a pretty good entry point for people to buy. Once we go through 50, I see silver going to $200 an ounce. I know I own a lot of silver personally because of that outlook. And then on top of it, silver coin sales are booming at the Perth Mint in Australia. In fact, the mint sold, get this, 10.7 million one-ounce silver coins since July 1 last year, according to their sales and marketing director, Ron Curry. That's 66% higher than the previous full fiscal year and about tenfold more than 5 years earlier. Sales of the one-ounce gold coins will be close to a record as well. A lot of people are buying because the soaring demand adds to signs that investors are stepping up because of the European governments having problems tackling the sovereign debt crisis, and central banks led by the Federal Reserve printing money to stimulate their economies, potentially devaluing paper currencies. Silver is the second best performing commodity over the past year, and obviously it's really rallied since April. It's one of those things where it's now the time to invest in precious metals. The telephone number, 1-866-623-2002, 1-866-623-2002. The website, wwpmc.com. We're going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. We're taping the show July 23rd, 2011 at approximately 9:09. That is Mountain, 11:09 Eastern. Our radio show runs AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, you can catch us at Harold's website, HESradio.com. The shows are archived there. This week's report, when it comes to gold and silver is fantastic, our newsletter, but diamonds, you have to read the information on diamonds in our newsletter this week. It is a must. You can get the information by connecting with Harold at rarecoloreddiamonds.com, or even better, call him and speak with him personally. The telephone number, 1-800-432-1022, 1-800-432-1022. We'll go through some of that information, but I want to touch on the featured diamond of the week, which you can see on Harold's website. This is a 2.16 carat round, fancy, intense yellow, internally flawless diamond. And all you need to do is take a look at this thing, and you'll realize that this is a special, special diamond. We have a picture of it in the newsletter. It is stunning, to say the least. Round diamonds are common when it comes to white diamonds. However, obviously, they are the rarest in color diamonds. And this diamond is a sensational investment. You can see it on the website in our newsletter. There's a GIA report. You can speak with Harold about this fantastic diamond. A couple of quotes, and it's interesting. Richard Russell came out this week with an article, Chinese billionaires buying gold and silver and diamonds. And he says all the major diamond dealers and upscale merchandisers are opening stores in China. The Chinese love to flaunt it. Wealth and Chinese, they know the value of tangible items that are priced in the vicinity of hundreds of millions of dollars and that are portable. Damn clever, these Chinese. Also, big diamonds are on the one way to move money without a trace. Billionaires everywhere in the world like to keep some of their wealth in something easily transportable. That according to Martin Rappaport, publisher of the Rappaport Diamond Report. Also, record prices for diamonds at international auctions in 2010 and 11 exemplified the growing trend among the world's high net worth individuals to see large diamonds as a safe and high growing haven as an alternative investment, and we have that story in our newsletter. A lot more too, Harold. I'll let you touch on it, but it's just stunning, the news that is coming out on the diamond side of the investment world.
I got to tell you, when I saw these articles this week, Randy, I almost fell off my chair. Again, we've been bringing diamonds to our Canadian clients and listeners, for the last decade. There has never been articles written like there is being written now on the diamond market, and I do believe that we had an awful lot to do with that. The fact is that the diamond market is on fire. It's skyrocketing. And now all the investor reports are writing about them. But again, this is something that we've known about for a long time. Most of my clients own diamonds, and the fact is that everything that we predicted that was going to happen in the markets and how they would affect the diamond market is happening right now. In actual fact, when you read the newsletter this week and go to the diamond section, those of us that own diamonds are going to be euphoric, because now you've got all these other experts coming out and saying exactly what we've been saying for the last decade, and they're anticipating that the prices of diamonds are going to skyrocket. In fact, here's what they're saying. Diamond prices rose by 17% in the first 3 months of 2011, and sales volumes have continued to be strong since then. De Beers, one of the world's biggest diamond producers, expect prices for rough diamonds to rise by about 20% this year. High-end Asian buyers are particularly keen on colored or fancy diamonds, which are much rarer and can now go for 100 times as much as a similar-sized white diamond. They're saying that diamond demand outstrips supply as China and India grow. Diamond demand is already starting to outstrip supply and will continue to do so until a major new mine is found and developed. And they say that that's really not possible, and if they did find something, it would take at least a decade to come online. So basically, they're saying and confirming what we've been saying so far this year, that the price of rough diamonds are up 35%. That's what the miners are charging the cutters, and then we are going to see price increases in fall of about 35% in our diamonds. So if you're a holder of yellow flawless diamonds, by the fall, your diamonds are going to be up by 35%. In actual fact, these diamonds take on a life of their own and can literally trade like a commodity when inflation hits. In 79 and 80, colored diamonds and white diamonds went up 500% in 2 years. They literally went up every single quarter, and we are positive we are going to see the same situation. In fact, back in 1980, there was a lot more diamonds around than there are right now. Colored diamonds, there's very few coming onto the market. We recommend very strongly that you buy the yellow flawless diamonds. They are the diamonds to own at this point because they're flawless, they're portable and private, and they're still reasonable enough in price that they're affordable. But a diamond that you can buy today, let's say for $20,000, in 5 years from now could easily be a $100,000 diamond. And there's very few investments out there that will give you that type of return with the safety that you have.